Hey everyone, good afternoon. Hope you are all doing great. Thank you for being here as always. Thank you for making the time. We appreciate your commitment to these training sessions. And this week is the first week that we are going to start on stage number 4, taxation. So if you have any questions regarding taxation and other stages, you can ask them today. We have a 10-minute question and answer at the end of the session. So you can just hold your questions for that time. And yeah. And also, I want to remind you that these sessions are being recorded and are going to be uploaded on our YouTube channel. So always have that in mind, that our sessions are being recorded. And also, if you know anyone that can benefit from these training sessions, you can let them know. You can also send their email addresses to me directly in chat, or you can send them to my email so I can add them to our contact list and invite them to the training session. Once again, thank you for being here, and we'll start our session shortly. Hope you have a great session. Hi, Morlai.
Hi, Sepede. Thank you very much. Good afternoon, everyone. And I hope you guys are keeping well. I hope you're ready, for this session. Yes, this is a new month, a new topic.
Yeah.
On the Moracle Accountancy Formula. Yes, taxation. But before we jump onto the training session, I think a couple of announcements, to make, yes, and so that we're all aware, what is happening. There's a lot happening at the moment, guys. Yes, a lot happening in the background, and some fantastic news. The work that we're doing with the SCCA, and the SCCA Advantage. I'm appealing to all of you guys. Please follow us. Yeah, make some noise. Yes, and I mean, like, share, what is happening in social media about this partnership, working relationship with the SCCA. As you know, we are governed, and monitored, and regulated by, SCCA. So we are in partnership with them to deliver, the SCCA Advantage program. And that SCCA Advantage program, we were instrumental, yes, and in bringing that program to life. Yes, this is where we're working with university students. Yes, those who are registered with SCCA, and then SCCA is now, organizing employers like ourselves, or training providers like ourselves, to provide internship. Yes, for all these young people who are going through university. Yeah, because there's a gap. Yes, that gap is after you go all your technical, skills. Yes, you've done your university degree. Now you are now studying to become, an SCCA professional, member. You don't have the right practical experience, then there is a problem. Yeah, so we want to try and close that problem. Yeah, and that gap that exists. Yeah, so that's why the SCC Advantage program. Yeah, okay. We're instrumental. At the moment, we've got 10, young people who are going through the program. And our program that we are doing here in the Moracle, yeah, is different, yes, because it's not only accounting training that we're giving to these young people. We're giving them mindset training as well. Really interesting, And so in the mindset program, you got 12 lessons that these young people are going to go through. 12, yes, mindset training. Yeah, you got the accounting training, which is the Moracle Accountancy Formula, which includes, artificial intelligence with all the software that we're going to use there. And I'm telling you, I have no doubt, they've gone through that program. Yes, employers will be really, ready to take them on board. Yes, and that is the difference here. So, guys, who are part of us, or even you are part of the CC Advantage program, or whatever it is that you do with us at Moracle, please go out there, and share and like and recommend, pass it on and let other people know. Yeah, there's some good stuff here. So thank you very much, for supporting us that way. Yeah. Okay. Today is Thursday. Yes. The 4th of April. Yeah. How time flies so quickly. We're talking more about tax. Yes. But like you guys know, we cannot talk about, any accounting subject if we don't go through the Moracle Accountancy Formula. Yeah. And again, the reason why we do that is because everything that we do here, yes, revolves around the Moracle Accountancy Formula. Yeah. The way we serve our clients is through it. Yeah. So for every client that we have in our books, yes, they go through the Moracle Accountancy Formula. So these 6 stages. Yes. Stage 1, Management Information System. Stage 2, Management Accounts and Added Value or Value Added. Stage number 3, Statutory Accounts and Scheduling. Stage number 4, Taxation. This is where we're going to be focusing this month. Yeah, a little bit more. Stage number 5, Reporting. And stage number 6, Filing with the authorities. My appeal to you guys, is to paint this picture. Paint this picture. Yes. The finance function, yeah, this is how it is. Yes, okay, there might be some slight variation in the way emphasis are placed on the different things that has been done, but it's these 6 stages in every finance function. Yeah, so if you're an accountant, yes, and then you are going to be part of the finance function, these 6 stages applied. Yes, okay. If you're going to be, working in practice and you're dealing with clients, yes, then these 6 stages apply because every business, whether it is a small business, whether it's a startup, whether it's an ongoing business, whether it's a national, international, multinational, whatever it is, yes, the finance function, the lifeblood of that business, yes, these 6 stages applies. So I'm saying, try and get the understanding. Paint this picture. Yeah, okay. But for us, how we design this, yeah, is slightly different. It's an emphasis, on certain key areas, and again, this is, well, I'm leading here, so I'm driving this forward. Yeah, this is my experience over all these years. Yes, try to put things into a model. Yeah, that it seems for me it's okay, and my staff and people who have worked with me, yeah, are in agreement, or even clients where we are applying this and it's working, and they come back and say, yeah, so you can see this makes sense. Yeah, okay. Stage 1 is this management information system. Yes, these are all the systems, different systems coming together. Yes, and they have to come together. It's not that's where you go one system sitting down there, not talking to the other system that is there. This is all the different systems coming together. Yeah, sales, system, purchase system, payroll system, cash and bank system, all different types of systems coming through. They're all talking to each other. The banks are connected, to the accounting system. Yeah. Suppliers, are connected, in a way through receipt bank, your data capture, whatever it is that system exists. Yeah. You raise in sales invoices, from your CRM system is connected to the accounting system. The payroll, you run the payroll, in the payroll software, that payroll software is connected to the accounting system. Yeah, so all of these things are all connected. Yes, that integration, yeah, is what we're talking about here. Yes, and all, that integration is doing is to enable, financial data to be captured, to be recorded, to be analyzed, and then reconciled. Yeah, that's what we're trying to do here, where we bring all the systems together. Yeah, and everywhere you go, when you get this working, I'm telling you, it's like heaven, things are flowing. Yes. And again, I'm saying no wonder why you hear in the news, yes, and that very scary sometimes, when you hear, how these reporters report on these things, that robots, are now competing with human beings, for, certain aspects of what we do. Yeah. And it's true, actually, to capture data, to record that data, to analyze data, to reconcile that data. Yeah, robots are trained, to do that better than us, faster than us, efficiently, and costs less. Seriously, guys. Yeah, remember that. Yeah, to capture data, record that data, analyze that data, reconcile that data. Seriously, we cannot compete with a machine. Yeah, okay, and this is where it is. So we have to take that into consideration. But you know what? Yes, let the machine do it because it makes sense. Business, think about it. Businesses, yes, they need to be profitable for them to continue to be in business. Yes. So they're looking, to cost, yes, at all costs to make them profitable. So if you are a human being, when you're taking so long to do these things, they will find an easy way, a cheaper way, to bring their cost down and to get efficiency. And that is, I'm telling you, it's a given. Let's be honest. And that's why we're accountant. We should be advising businesses this way, to save cost. And if it means, yes, the save cost is part of what we do, cut some of our, our own time and say, you know what, I think the machine is better than me, then we should be saying that, wholeheartedly. Because there are other areas that the machine, yes, or robots cannot do. This is where we come in. Yes, because we got, and we are flesh and blood, we need to be able to relate to people. Yes, you build that relationship, you know your client inside out. And this is where, for me, machines cannot compete with us. You have to be able to smile to your client, to be able to provide tea and coffee, and then, talk to your client, to listen to your client, to understand where your client is coming from. Yeah, emotionally involved with that client. You understand, to know, what really makes that client wake up every morning to come and do their business. Yes. Now, robots, it will take some time before they get to that place. Well, this is where we can excel. Yeah. Okay. There's no competition there yet. Yes. But to capture data, to record data, to analyze data, to reconcile data, guys, sorry, they can do it better than us. Yeah. So that's why, here we pay so much emphasis on the background information. Yeah. You got to know these clients inside out, guys. Inside out, you got to know this. Yeah. Because when you know your clients inside out, it's going to help you to be in that position whereby you are serving them without any reservation. Yeah. Okay. So it's a lot that is now packed in this stage number one. Yeah. Okay. So that's why most of the time, guys, we hear us talking about stage number one. So, because everything starts from there. Yeah. QuickBooks, Zero, Sage. These are the three packages that we use here. Yes. And we got, and encourage people to go through the certification. And again, we have managed to get, QuickBooks Zero, these guys, to give us free certification. So if you are part of us, you can come down here and do the certification for free. You don't have to pay anything at all. That is beautiful, so let's share this out, more and more. Because when you get the certification, you're not just getting it for the sake of it. Yeah, clients want to see and talk to people who are, they're suitably qualified. Yes, they got the right certification to deal with them. Yeah, financial matters. Yes, that is so close to so many people. Yeah, businesses. Yeah, they are entrusting that in your hands. They want to make sure that you are suitably qualified and experienced to be able to do this. Yeah. So when you go and present yourself and say, I'm QuickBooks certified, Zero certified, it helps. Yes. So guys, remember that. That's the reason why we're doing this here. That's why we're emphasizing on, certification. Yes, if you don't have it, guys, please try and get it. Yes, it's free. Yeah, and now it's much easier now to get because there's so many people getting it here now. So that collective wisdom and knowledge is being spread, So you should not be suffering in silence. Yeah. So talk to your guys and help to get that out. Because once you got, management information system in place, it feeds into stage number 2. Yes, your management accounts and value added. Yes, where you're now taking those historical data, yes, and then add, some forecasting, looking forward, looking outside of the organization, looking at what other people are doing, the industry that the organization operates in, and then the KPIs, bring all that information together, and then you begin to provide some advice, yeah, to those who are charged with governance. It's so important. You do this every month. Yes, I'm telling you, that business is going to weather the storm. However difficult that situation is for that business, yeah, they'll be able to, to react or respond, you understand, to a given situation. Yeah, because you are actually doing, really good work every month, looking at the financial, looking at the numbers, looking at other things. So it's so important, guys, that number 2 is being done. Yes, you're taking that information from stage 1. If number 1 is not done, then number 2 is going to be difficult, to do number 2. Yes. So that relationship that exists between number 1 and number 2 is so like this, really tight. So number 1 got to be done every day, every week, every month. Yeah. Make sure the figures are everything is fine. All those adjustments, those accruals, prepayments, deferred income, accrued income, yeah, depreciation, all those journals, month end, yeah, it's got to be done. Stage number 1, important. Yes. And then on a timely basis so that you can move to number 2. And then number 2, you can then do that every month. Yes. And then provide that information and give it to those people who are responsible to make strategic decisions for the organization. If number 1 and number 2 is done, properly for any business that is out there, whether it's a small business, a medium size, whether it's an international, I'm telling you, that business will strive. That business would do well. Yeah. So we are advocating, even for us internally, my guys, you hear me talking about this all the time. Number 1, number 2, you got to be able to make it work. Yeah. Because the clients, businesses, they deserve it. Yes. They deserve it, guys. Yes. So us as accountants, if we really, are talking about, serving those clients with this blessed, this blessing that God give us, you understand, to study for ACCA, to do your AAT, to do your accounting exams, and all of this stuff, and say we are accountants. Yeah, I'm telling you, this is what we're there to do, to serve. And the way we serve is to make sure number 1 and number 2, yeah, is happening. Yeah, the way we're talking about it here. When you do that, I'm telling you, it's so much, transformation. There's so much that you yourself will feel, you are giving. Yes. And I'm telling you, when you've done this, you can go to bed and sleep. Yes. You lay your head in your pillow. Yeah, you can sleep comfortably. Yeah. But when you know that this is not happening, I'm telling you, there's a lot of stuff that you take to bed, and as a result, I'm saying it can cause, because we all have conscience. Yeah, you know you're not doing it. Yes, you know you've been paid to do this and you're not doing it. You know that business needs this and you're not doing it. Yes, for whatever reason. Yeah, that conscience is coming back again to you. And sometimes for me, I'm telling you, yeah, it torments me when we know we're not doing this. Yeah, so I'm appealing. Yes, wherever you are, guys, wherever you are. Yes, number one and number two, that relationship, very close relationship. Yes. Number three is the statutory accounts and scheduling. Yeah, this is done once every year. Yeah, statutory account, like we say here, is statutory. Your focus is on the statutory bit. Yes, it's not the time when you're going to pass journals for payroll, journals for prepayment or accruals or all this stuff. No, it should have been done. Yeah, in stage number one. So you take the information from stage number one and move it to stage number three. Now you focus on the statutory. Statutory means by law. Yes, account need to be prepared in a certain way. Whether it's for profit making or whether it's for charity or non-for-profit, the account need to be prepared. Yes, in accordance with the Companies Act, in accordance with the Charities Act, in accordance with the FRS 102. Yes, this account need to be. Yeah, that's why it's saying statutory. So you focus on that, making sure that you know all the disclosures are there. Yes, not a time for you to begin to worry about those numbers. Depreciation has not been done, accruals have not been reversed, or new accruals. No, no, no. It should have been done in stage number one. Get that distinction, guys. Yeah, we are emphasizing. Yeah, get that distinction. Yes, it should be done up there, stage number one, not in the statutory account here. Here, you're focusing on preparing schedules. Those schedules are the supporting evidence. Yeah, every figure that is in the statutory account, you go breakdown. Yes, that income there, what is it? You understand? Have you reconciled that income, to the VAT return? If this company is a VAT registered company, that net income that you got in your turnover, you got to reconcile it. Make sure that is reconciled, to the VAT returns that you submitted, yeah, for the whole year. And the schedule is there to support it. Yeah, that's how you begin to understand, oh, my income is complete. Yes, because VAT, yes, the returns are done quarterly, and the statutory account is done at the end of the year. So when you put those two together, they have to tie up because they all come from the same system. And which system are we talking about here? The management information system. Yes, the information, yes, that goes to the VAT, the information that goes to the account are coming from the same source. And that source is the management information system. If you're using QuickBooks, that's what we're talking about. If you're using Xero, that's what we're talking about. If we're using Sage, that's what we're talking about. It's the management information system that exists that feeds information to the VAT, yes, that feeds information to the accounts. So when you look at those two independently, they should tie up. Well, these are all the things that we're talking about scheduling. Yes, so important. When you've done that, you know that if you got any question from HMRC, if you got any question from the Charity Commission or Companies House or bankers or even your clients, yes, you got the answer for it. Yes, so they can just pull the information, the schedule, and say, here's my breakdown. Yes, that's why we're emphasizing on scheduling. Yes, supporting the statutory account by law. And I'm saying to you guys, by law, yes, you got to read the Companies Act. You got to read the Charities Act. You got to read the SOP, FRS 102. If you're not doing that, guys, seriously, guys, you cannot do, yes, number three. And if you do number three without you reading and getting an understanding of what the Companies Act is saying about accounts preparation, what the Charities Act is saying about accounts preparation, what the SOP, FRS 102 is saying about accounts preparation, then seriously, guys, you're missing a lot. Yeah, so my advice is, guys, if you're doing this, you're involved in doing this, yeah, okay, yeah, take it for some bedtime reading. Yes, okay. And that's really a good bedtime reading. Companies Act, you're reading what it says about accounts, but you know what? It's advisable. Yeah, because that gives you, it's a specialist, it's a specialized job. Yeah, preparing statutory accounts. Yeah, okay. Number 4, taxation. It's the area that we are going to talk about more in this month. Yes, and this area for me, every time we get to this area, you look at it and say, well, hold on. Yes, and you get clients. It's a practical bit now. You got clients who are coming to us. One of the reasons they're coming to us, they want us, to act for them, to save them from paying tax. Yes, I'm telling you, most businesses, when you say, well, you need an accountant, yes, the first thing, if you ask them, why do you need an accountant, it's pointing to tax. Yeah, so my accountant is helping me, to save tax or not to pay tax. Yeah, and people hold that perception. Yes, that's why we appoint an accountant. Oh, I could do everything, I need an accountant to do my tax for me. Yeah, I don't want to pay tax. And remember this, guys. Yes, we are professionals. Yes, that's the first thing. We are professionals. We are part of, in our case, ACCA. Yes, our regulatory body. Yes, we owe a duty of care. Yes, to this profession that we belong to be a professional, to act like a professional, not only to be seen as a professional, but to be a professional, to act in that capacity at all times. Because if we don't, then we'll get trouble. We'll get into trouble with our professional body. Yes, and there are certain things that we're expected to do as professionals. Yes, okay. So if our client comes to us and they're saying to us, they don't want to pay tax, yes, and you're going to now begin to consider, okay. But what do you mean by that? So have the conversation, yes, because sometimes people say things but they don't mean what they say, yeah, or they don't even understand what they say, yeah. But when you begin to understand what these guys are saying, yes, oh, Mr. Accountant, yeah, you are my trusted advisor. I want you to work in my capacity to act for me, so that, I pay, my fair share of my tax. That is what they're saying to us. Yeah, so I want you to represent me, and that's why I'm appointing you. Okay. But at the same time, we want to make sure that as an accountant belonging to the ACCA profession, yes, we got to be able to serve the government as well. So we are like an unpaid tax collector in a way, yes, where we are employers, employing people and paying tax, deducting tax and paying those tax over. But also in the advisory capacity, when we are advising the clients, yeah, we got to be able to advise them knowing that, yes, the government, depend on us, to be able, to make sure, businesses are paying. Yeah, and we need to manage that. And I want us to understand that, guys. Yes, that's where we are, in the middle. Yeah, we should not be unfair. Yeah, we have to play yeah, supporting our clients, advising them, yeah, take their interest, but at the same time, knowing that, the revenue, yes, the government wants, revenue, yes, businesses to pay their fair tax, individuals to pay their fair tax. Yeah, okay. So it is so, so important, a subject. Yeah, everywhere you go in the world, governments, are talking about taxation. Yeah. So we need to take that into consideration, guys. Yeah, as individuals. Yeah. Different types of taxation exist. Yes, for us. Yeah, we got corporation tax. Yeah, this is for companies. Yeah, that are profitable. We got corporation tax, for companies that are non-for-profit. Yes. Corporation tax for companies that are, we call it for CIC. Yeah, community interest company. Corporation tax, for even charities now. Charities are asked, yeah, incorporated charities are asked to submit, a corporation tax return. Yes? You say, well, hold on, why charity? They are exempt from tax. But the only way revenue, will know whether these organizations are really, truly, charitable, organization. Yeah, is by asking them, to prepare corporation tax so they can review those numbers. Yes, because there are sometimes charities, they are there registered with Charity Commission for a particular purpose, but they end up drifting from their purpose that they registered as a charity and doing something else. And if you did that, you understand, then you are now, in breach of your own governing document. Then that means, for HMRC purposes, that activity is taxable. So we, the advisors, need to know that. So when we are now doing accounts, particularly stage number 1, when we're posting, yeah, we need to know, this organization inside out, what they are registered for. That's why in our background information, the first thing that we have down there, number 1, the background information, yeah, is the objective of that organization. What are they registered to do? We need to know that. If we don't know that, then we are going to be posting things, anyhow. Yes, so we need to understand why that business exists as a business, because there are tax consequences. Yes, if you post things incorrectly, yeah, you got, number 4. Yeah, it's got massive implication for it. You are in number 1. You don't know the organization's objective. You are now just posting transaction because you see invoice coming through. You're just posting it anyhow. You got direct implication for number 4. So just paint that picture. Yes, you cannot be posting, yeah, in us where we come down here, you cannot be posting when you don't know or have sufficient background information of this organization. We don't allow you to post. Yes, okay? So you want to get a background information. And that is one of the reasons why we're saying to you, yeah, because if you don't know, yes, you don't understand the organization objective. Number 4, there's tax implication there for that business. Yes, so you could be somebody who is number 1 posting, and you see some transaction happening, and then you flag that and say, hey, something is happening here. I see some transaction which is not for this business. So if it's not for this business, then the business objective, then you need to now say, well, hold on, what is happening here? Yes, you need to flag it up, not just post it because it's an invoice. You cannot post it because if you did, there is tax implication here. Yes. So understanding the organization inside out helps, yeah, with the tax. Yeah. So there are a lot of different situations that, that causes organization to pay tax or not pay tax. So we need to understand that. Yes. As I said there, we are unpaid tax collectors, he says. Yes. As a business, we employ people and we're collecting tax and then pay that over. We are advising businesses that employ people. Yes, so when we advise them indirectly, yes, we are now helping those businesses to become unpaid tax collectors, because those businesses, once they employ people, they are now deducting tax from these people's wages, and then this money they pay it over, yeah, to revenue, and the revenue does not pay them anything at all. That's why we call them unpaid tax collectors. Are you with me? Very important, role that we play. Yes, and by law we got to do it. Yes, okay. We need to have tax planning strategies in place. Yes, and tax strategy, it doesn't wait until you get to number 4. Yeah, it starts earlier on, stage number 1 and number 2. Every month that you are having meeting, yes, you have a schedule there to talk about tax. Well, you can see if you're posting transactions every day, every week, every month, stage number 1, yes, and then you can see the profit. Yes, then you can say, well, hold on. Oh, this business, yeah, month 1 is making, good profit. Well, if these profits continue to be like this is what the tax is going to be. Well, how do we now try to mitigate, the tax exposure? So you don't have to wait until you get to number 4. You can start doing it in stage number 1 and stage number 2 to begin to look at the tax every month, what the tax is looking like. Yes, that's what tax planning strategies is talking about. Is that something that we can do now? Yeah, if this income or surplus or profit continue to go like this, yes, then this business is going to be paying so much tax. That discussion needs to be happening in stage number 2. Yeah, you don't have to wait until we get to number 4. Yes. So stage number 2, every month you talk about it. Yes. And then you say, okay, maybe we need to now maybe buy, some capital item, invest in capital items. Yes. Because capital items, when you do that, now you're able to get capital allowances. You understand? Maybe the government have got some incentive there. Yes. Maybe there is potential for R&D, research and development, credit. Yes. So you can see expenditure being incurred. Yeah, stage number 1. Yes, you record that, and then number 2, you have a discussion. So you don't wait until you get to stage number 4. And I'm telling you guys, when you begin to see this kind of orderness, yes, or the orderly way of thinking, yeah, how can businesses, really don't mitigate their tax exposure? If you start talking about this every month, you are having discussion in stage number 2 about taxation. Yes, every month. Yes, there is a schedule there in your discussion. You're talking about tax and mitigating tax. Yes, by the time you get to prepare your corporation tax, I'm telling you that business is in a very strong position. To be able to, number 1, yeah, to minimize the tax exposure, but also number 2, to make sure there's sufficient money sitting in the bank account to pay those taxes. Yeah, we got businesses at the moment, yeah, where the VAT they're struggling to pay, corporation tax they're struggling to pay, PAYE they're struggling to pay. Why? Because there is no planning, there is no thought process, there is no strategy, put in place. And where does that strategy takes place? It should be stage 1 or stage number 2. That's where it should be. The management account every month we should be talking about it. Yes, and if you do that, I'm telling you that business is going to be running very, very smoothly. I'm not saying they're not going to have a hiccup, but even when they have a hiccup, I'm telling you, you'll be able to respond. Yes. So stage number 4, it is so, so important. Yeah, tax planning. Yeah, to take place to make sure that things, are reviewed, at the right time, in the right, discussion happening, and then the right, action taken. Yeah. HMRC, we talk about it, if you are doing tax, you've got to be able to understand, what HMRC and how HMRC is thinking. There's so much information. Every day now you see news about HMRC, what they are planning to do, how they try to raise money, and also the incentives that is out there. Yes, businesses are out there, startup, guys who are struggling, all the financial crisis in the whole world, all these wars that is happening is having, massive, massive implication for financial, planning and everything. Yes, and if anything at all, I'm telling you, for me, what we do as accountants, if we can bring some peace to the world, all these wars that is happening, if we can stop it, I'm telling you, it will be a beautiful place. And this world needs to be a beautiful place. I'm telling you, less wars, let's use this, to be able to preach the gospel somehow, And but think about it. There's too much that is happening out there. Yes, there's too much that is happening out there. So HMRC are helping, businesses, to stay afloat. I mean, you look at the news, businesses, are falling, left, right, and center. Even from, the top people, guys who have in the establishment. Yeah, it was the other day I was listening to the news or reading where the what you call it now. I think it's the princesses, parents, their business, gone into liquidation. And you begin to think about it, hold on. Yes, the princess, their parents, business goes into liquidation. Seriously. Yes. You got businesses, body shop, yes, all over, in the UK, so many branches, you understand? I've been there for so many years, yes, and they're going into what you call it, administration. You think about it, well, hold on, what is going on? Yes, what is going on? Yes, and I'm asking, is it because number 1 and number 2 is not being paid attention to? Or is it because what is happening here? Yes, you got number 3, Yes, they're doing number three, but number three is all about, presenting a rosy picture, which is not the true position. On number four, the tax that is happening here, these guys are managing to do whatever it is. What is happening? Number five, reporting. The auditors come in, they do what they have to do, you understand, and then they give a good report and they leave out. And then next minute, they say, hold on, this business is going on in administration, it's going under. What is happening? Yes, what is happening? Yes. And I'm telling you, there's a lot of things that is happening. I don't think there's just one thing. Yeah, there's a mixture of things. But we're talking about tax. Tax is one big area that is affecting so many businesses. And one of the reasons why it is, because there is no planning. We don't deal with this, at the earlier stage. Yeah, and that stage is number one and number two. Are you with me? Number one and number two. Yeah, if we pay more attention to it, number one, number two, I'm telling you, it makes life much, much easier when it comes to preparing, the corporation tax return and submitting it and paying those taxes, and then be in the good books of the HMRC. There's so much penalties that's happening, draconian penalties, the way the penalties are very, very stiff. I'm telling you, and that is happening down there when you get to understand what is happening with HMRC. Yes. Anti-money laundering. Yes. So many things is happening out there. Individuals, businesses, for a business like us, yes, we take on a client, we need to go through anti-money laundering checks. It's a requirement. Just like when you go to the bank account, when you go to the bank and you want to open a bank account, yes, the banks, before they open up a bank account for you, they want to go through their anti-money laundering checks. Yeah. KYC, they call it. Yeah. Know your whatever it is, your information, your numbers or so. Yes. And so they want to check you out. Yes. So they want your ID. They want to check you. Yeah. So for us, it's the same. Yes. So if you are dealing with a client, yes, and that, hold on, that client is, got question mark, in terms of their relationship out there, well, do you want to work with that client? No, you don't. Because if you did, then you will bring in the profession into disrepute. That's why we need to go through the due diligence for every client, every individual that we work with. Because if these guys have got, some question, to either their personality or whatever it is they're doing, yes, then we don't need to be able to associate with them. We don't want to, because otherwise, if we did that, we'll be bringing our profession, into disrepute. Yes. So, and we'll get into trouble. Yes. By doing that. So we want to check people out. We want to check businesses out. Yes. It's so important to know that. But think about it. Tax is a big, big, big thing. And here in the UK, yes, one of the what you call it now, the top, earner for the government is taxation. Yes. So this topic, I'm telling you, if you're an accountant, well, we need to be on top of this. Yes. And we're going to spend some time and talk a little bit more the different types of taxes. Yes. And then how those taxes, we should be planning to deal with them. Yes. Whether it's corporation tax, whether it's self-assessment, if it's corporation tax for the different businesses that we have. Yes. That's why, again, in stage number one there, that background information, we're saying, you need to understand what client, that full understanding, background information. Yes. What type of business are you actually dealing with? Yes. What type of business? Because that type of business is so important, when it comes to tax. Yes. It's so important. Yes. Because there are lots of different, reliefs that you can actually, be claiming or liable to claim. There are other things that you'll be able to do, to save the business a lot of tax. Yes. Are you aware of that? Stage number one. Are you aware of that? Do you understand? What type of business, we are doing, from stage one, where we're capturing those data, recording those data, analyzing the data, reconcile the data. So you cannot just say taxation, oh, well, when I get to it, I'll do it. No. It starts from stage number one. Yes. The way you capture that data is very important. Yes. And then number two, you're talking about it all the time. Yeah. But what I want to leave you today with, is to get an understanding of the different taxes, that we deal with here. Yes. And you will see that some of them, they fall in stage number one, and some of them, they fall in stage number 4. Yeah. Okay. Let's try and differentiate them. So when you go to number 1, yes, you will see there, I say management information systems. That's what it says for us. But there, what you find there, you will see that, oh, well, there is payroll. Yes, in number 1, because payroll is being done, every month. Yes, you run the payroll and pay people. Yeah, staff cost is one of the biggest costs. So trying to understand that is some kind of tax. Yes, okay. You're paying people, and the government is saying that you have to deduct the tax. You understand? And then the employer need to pay tax, and then that amount of money you pay to the revenue. So there's a tax there. Yes, and that tax, you got to pay that every month. Yes, you got to do the payroll every month, and you got to file it every month. So there's one form of tax there in stage number 1. Also, in stage number 1, yeah, you're going to be doing VAT. It's a tax, another type of tax for businesses. Yes, once you get to a particular threshold, then you need to register for VAT. Yes, and a particular business. Then if you are, then you need to now begin to submit VAT on a quarterly basis, as the case may be. So as you are actually, if you register for VAT, that means you're charging your customers VAT. Yeah, so you're collecting that tax. And then when you spend money, on expenses, the tax that you suffer, you can deduct it from the tax that you've received from customers. The balance, whether you are, collecting more than you are paying, then you need to pay the balance to revenue. Or if you are actually paying more than you are receiving, then revenue will give you some more tax. That happens in stage number 1. Yes, not stage number 4. It happens in stage number 1. So you need to be able to monitor it. Yes, on a month-by-month basis, payroll. On a quarter-by-quarter basis, you VAT. For charities, there is what you call gifted. Gifted is all about, personal individuals making donation to charities. You got to be registered as a charity. You got a charity number, and an individual, yes, makes a donation. For that individual donation to qualify, that individual should have paid sufficient tax. Yes, because it is the tax that this individual has paid to revenue. That's what the organization, the charity, is now going back and say, Morlai has paid tax, on Morlai's income. Yeah, but Morlai has made a donation to this charity. So the charity now saying, oh, Morlai, thank you very much for that donation, but we will go back again to revenue and get 20%, yes, of that. Yes. So additional money coming to the charity. Basically, what is happening is the tax that Morlai has spent to revenue is what revenue is giving some of that to the charity. Yes. So you got to be aware of that. That's another tax. You understand? A charity that is in a position when people are making donation, they should be able to collect that money back. So the government is supporting charities. Yes. If you are doing stage number 1, are you aware of that? Yes. If you are in a charity, environment, yes, are you aware of gifted? Yes. If you're not, then hold on. Yes, your background information, yes, is telling you you're missing out something, because that charity is missing out on potential income that they would have been collecting from revenue. Yes, so you bring that into the equation for tax. So in stage number 1, you look at it and say, well, payroll, yeah, it deals with tax, HMRC. VAT, it deals with tax, with HMRC. Gifted, yeah, it deals with HMRC. Yeah, so that's number 1. Now, number 4, yes, you got what? At the end of the year, once the account is prepared for a company, corporation tax now comes in. Yes? So you're looking at corporation tax. And number 4, you're looking at self-assessment for individuals. Yes? At the end of the day, take a scenario, a company that has got a director, yes, and that director is receiving salary, director's remuneration. So when a director receives salary, we call it director's remuneration. Yes? Okay? And then when other employees are paid staff, when they paid salaries, we call them staff salaries. That's what we call them. Yes, okay. So you have to have that distinction. Yes, director's remuneration, that is the salary that is given to the director. Yes, but then the other staff, the salary that goes to them, we say staff salary. Every month in stage number 1, when the payroll is done, you got to split that amount. Yeah, because there's implication there. Yes, a director receiving salary in the payroll and a staff receiving salary in the payroll. These are 2 different ways of categorizing it. Yes, in the statutory account, you got to disclose it separately. Yeah, you cannot just join both of them. You gotta break it down. Yes, why? Because when it gets to number 4, that director that receiving that salary there, yeah, the director now need to now prepare self-assessment. Are you with me? That's the reason why you want to break that figure. Yeah. So number 1 on the payroll, yes, the director of that company. That's why you need to know who the director is. So in the background information, it says who is who. That's number 2. So you're now identifying the directors. You're now identifying the staff. So when you go to payroll, and then you see the director is in the payroll, then you say, okay, that director is in the payroll, then that means I need to break down that director's salary, separate it from the other staff. Why? Because the statutory account says that. By law, you got to break down that. And number 4, yes, when the director receives that money, that salary, it got to account for it, as a self-assessment. Oh my word. Yes, these are the things that makes this system, what it is. Yeah. So from stage number 1, do you really understand that before you start posting? Do you really understand that implication? Yes. If you're doing payroll, do you really understand that you need to break down, you understand the salary paid to the director, yes, and the salary that is paid to other staff? Do you understand why? Yes. And if you don't understand, then really you should not be posting. Yes, you should not be involved in stage number 1 because your background information is not good enough. So you got to understand that, because if you don't do that, when you get to stage number 3, yes, then the statutory, accounts are not going to comply, yes, with the law. What the law says, if you pay a director, you're going to split that director's remuneration separately from those who are ordinary staff. But when you get to taxation, then you need to consider self-assessment. Self-assessment for directors, yes, is so important. At the end of the year, yes, you're going to prepare self-assessment. So if you now make sure that information is captured correctly from stage number 1, yeah, you can see how stage number 4 is going to be so easy to report on. Yeah, I want you guys to understand this. Yes, on taxation, yes, you see some aspect of the tax in stage number 1, and you see some aspects of tax in stage number 4. Why are they stage number 1? Why are they stage number 4? Okay, let's continue the discussion next week. Yes, tax in number 1 against tax in number 4. Yes, what is your understanding, and what's the difference? Why is it that they are number 1, and why is it they are in number 4? Yeah, okay, something for you guys to take home, and then dwell on. Yeah, and then next week we'll continue on that. Time for 1 or 2 questions. Yeah, thank you very much for listening to me. Any questions for today? Any questions before we move on?
Yeah, I have a question.
Yes.
So you've gone to this company A,
Yes.
And actually, they've been not separating the directors' remuneration and the staff. What do you do for maybe since the company began or something?
Well, the first thing is again I'm going back again to stage number one. Yes. Maybe we should not be allowing people to to get involved in stage one when they don't know what to do. Yes. And the background information, yeah, is the starting point. So if you don't have that information, the background information, and then you're involved in posting, well, we know, James, this is a recipe for disaster. And this is exactly what we're saying here. Yeah. And again, I'm saying this, when you hear people say, oh, well, bookkeeping, yeah, that's why we don't use the word bookkeeping here. Because, when you say bookkeeping, we lessen the value of what we do in stage number one. When we are capturing data, recording data, analyzing the data, reconciling the data, we are really lessening the value, what we call it bookkeeping. I'm not saying, bookkeeping is, we need to, get rid of that, but in our books here, we don't call it bookkeeping. Yes. We call it the management information system stage, where all the systems are coming together. And before anybody gets involved in doing that, that person needs to get so much understanding about this business. Yes. And really, that point where you talk about is number two. If you really, draw out the organization chart and you see James is a director, and when you're doing payroll, you see James is there in the payroll, you would know, well, hold on, James, yes, I need to separate James's salary, yes, when I'm posting it in the accounting system, because James, his salary as a director should be going to director's remuneration. Yes. And then you got Sharon, who is a staff, and his name, yeah, is a payroll. Then we know that Sharon, yeah, salary in the payroll should be posted in the account to wages and salaries. Yeah. And if we don't have that understanding there, yeah, and even at that level, you can see how problem is going to be. That means there's going to be a lot of adjustment, allocation, and then journals left, right, and center, yeah, when it comes to doing the accounts. That should not be in the account phase number 3. It should be stage number 1 there. Yeah, so there's more education, there's more awareness, there's more training, there's more, getting these guys to understand. Yes, go to the background information, and put more information there. Yeah, it's not good enough. Yeah. So when you prepare every month, you see your trial balance, Now we're talking about, the month-end review, oh my goodness, and we've been discussing that. So we've got a team now, we're going to talk about month-end review. We're looking for those things now, in the trial balance. Yes. And so important, guys, to get it so early. Yeah. Because you can see that director is earning every month. You can see the director, how much money is earning. Yes. So by the time you get to do the self-assessment down the line, you know how much salary that guy is getting. Yes. And now, and we've got situations like this where, all of a sudden, the director is saying, oh, HMRC is asking me to pay more tax because, well, they see themselves as an employee. So they say, oh, my tax has been deducted at source. But now HMRC is asking me to pay more tax. Why is that? Well, the rule says, yes, if you earn over a certain amount of money, even though you were in the payroll, your tax has been deducted at source, there's a possibility that you might have been underpaying tax. Did you know that as a director? No, most people will not know. Yeah? So when HMRC send you an assessment and say you have to pay more tax or you have to do a tax return, they say, well, no, hold on, I am an employee. Yes. Why should I do, a self-assessment tax return? Why? Because your income is over 100,000. Yes. And if it's over 100,000, then the rules are different. Yes. Okay. Did you know that? Or the accountant or whosoever was doing stage 1, does that person know that? because that person should have advised the, the director. Yeah. But that person, who was doing the payroll is not even aware. He's just running the payroll for sake of it. Well, that's not good enough, guys. Yeah, it's not good enough to just run, payroll for the sake of it, and you don't know the payroll rules, you don't know the tax rules. Yeah, it's not acceptable, guys. Yeah. We should do more. We should do better than that. Yeah. Accounting, and in personal development, we have this belief that everything is connected. Yes, the world is connected, and the example that I normally give is, well, we're all connected individuals. It says, well, you're thinking about somebody, the phone rings, and oh, James, I was thinking about James, and then James calls me on the phone. Oh, James, I was just thinking about you, and you called. It says, well, it's an example of how we're all connected in the world. Well, here I'm saying it's the same thing. Yes, all the stages, these 6 stages, they're all connected. Yes. So if you delay something in number 1, you're gonna catch up, my friend. You're gonna catch up with you. Yeah. But you do it properly in stage number 1, then all the bits are going to flow so easily, guys. Yeah. So I'm saying here is stage 1. You can see why stage 1 we're emphasizing and overemphasizing it. Yeah, that's stage number 1. There is, it needs so much knowledge base and so much awareness. Guys, don't come. Particularly the young people who are coming through. And you're coming in. For this. Oh boy, yes. Stage 1. Yes, there's so much information that you need to know. Yes, there's so much. So be patient. Yes, don't come wanting to just post. Yes. I can see the eagerness in so many of you want to post. All the ones that want to see QuickBooks, post, and I understand that. But I'm saying to you guys, there's so much that you need, and believe me, there's so much that you need to know before you start posting. Yeah, there's so much knowledge base that you need to understand. Yeah, when you understand that and you start posting, I'm telling you, you will see how life is so easy. Yeah. But a very good question, but I say you go back again to stage 1. Yeah, guys, let's not allow that. So if you're doing payroll, I'm saying to you guys, if you're doing payroll, guys, go back again and watch that. Yes. If the business that you're operating, yeah, is a profit making, yes, and there are directors in the payroll, and you got other staff, please make sure you break that down. If you have not been doing it, yeah, start doing it, and you'll see massive difference. Yeah. Well, it's a very good question.
Thank you.
All right.
Yeah.
Any further question? Just one more question before I jump out. Yes, I know time is gone so quickly. Any further question, guys? Tax is another big subject. Yes. Okay. And particularly we'll go international tax as well. Yeah. So again, questions from elsewhere, not only in the UK. Okay, I know that our businesses are all here in the UK, but now we've got businesses that are elsewhere now. So we get clients who are all over the world now. Yes. So we're talking about international tax here. Yes. And it's a big challenge even for me, to read up, to understand what is going on. Yeah, in Africa, what is going on in other parts of Europe, what is going on, in the US, yes, Asia, so but I'm saying I should not be the only one, I'm advising all of us, because we are international business now, we're international, people, yes. We should be able to understand what is going on, elsewhere. Yeah. So thank you very much. And I look forward to talking to you guys next week. All been well. Yeah.
Thank
Take care of
you.
yourself
Thank
and
you
God
very
bless
much,
you.
Malai.
Yes,
Thank you.
okay.
Bye.